Hello traders, Gary Wagner here. It is 12:18 in Honolulu, 6:18 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 19th day of May, 2022, and this is the Weekend Review. In the mid-1990s, as a young technical market analyst, I was invited to speak at the Dow Jones Financial Symposiums, a 3-month lecture tour which I attended 1 full month, speaking in 8 cities. Many of the top analysts were there. I was green. However, because my focus was on Japanese candlestick patterns, I was welcomed into the group. One day over lunch, Larry Williams asked me if I understood the difference between a technical analyst and a fundamental analyst. Without waiting for any input, he said, "We as technical analysts are like passengers on a ship standing at the back of a boat, looking at the waves formed by the propeller of the ship and attempting to judge the direction of the ship by the observation of the wake from the propellers." He said that the shortcoming of this type of observation to project future directions of the boat will work to some degree, but only the captain knows when he will turn the wheel. That's exactly what happened today when the captain of the central banks turned the wheel. James Powell announced a pause in rate hikes. Gold gained $20.10 or 1.03% today, with the most active June contract closing at $1,979.90. Silver gained 1.64%. That is a gain of 39 cents, with the most active July contract closing at $24.02. Lastly, the dollar did lose some ground, down 0.37, with the index fixed at 103.07. Since May 4th, when market forces took gold up to about $2,085, just a couple of dollars shy of the all-time record high, we saw gold slowly dissolve, with lower prices consistently trading to a low about $1,959 yesterday. Today, speaking at a conference of Federal Reserve officials in Washington, D.C., Chairman Powell said that it is most appropriate that we take a look at the information we have and take a pause on the rate hikes. That took gold substantially higher. It also dropped the price of the U.S. dollar index and took silver higher. Depending on what happens when Biden returns, and whether or not there is any resolution to the negotiations regarding the debt ceiling, as we get closer to June, we could easily see gold trade back over $1,994.50. That's the first mark we would like to see, because that represents the 50-day simple moving average. And if the talks break down or continue to be in a stalemate, we would easily see gold break above $2,000 per ounce. If the stalemate continues, the next level of resistance would be 2,050, with the final being the all-time record high at 2,088. This is a news-driven market, and depending on the negotiations, now that Powell has signaled a pause in interest rate hikes, which will set a bullish undertone for gold, if there is a resolution, we won't expect to see much of gold in the way of upside movement, but the longer it takes to solve this crisis, the higher gold will go. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you after the weekend for the next daily update and review. Bye-bye. If you like our report, remember to like, share, and subscribe to our channel.